Happy New Year. It's January 2025, and I'm excited to bring you Stephen Thomas, my favorite economist and real estate market forecaster, his latest prediction for what's going to happen to the housing market in 2025. And we're going to go through it all, but before, in case you haven't met me, my name is Holly McKhann. I'm a local realtor in Orange County, and I fixed and flipped over 200 houses with my husband before I even got my real estate license. And I've been licensed, I think, 9, almost 10 years right now. And I've also helped another 200 people buy and sell homes since that time. So I've got a vast, wide array of experience, and we have 8 flips happening right now. I think we have 5 local ones in Orange County and 3 things happening out in the Palm Springs area. So that's a quick background on me, but let's get back to the housing market forecast. First of all, Stephen talks about a little bit about what happened in 2024, because it's always good to look at the past before you look to the future. So he shares that in 2024, our active inventory started with 1,623 homes. That's the second lowest level to start a year since tracking began in 2004. So we were only behind 2022's 954 homes. During COVID, that was like a whole crazy market right there in and of itself. The average start before the pandemic was 4,500 homes. So we're really low compared to what felt normal to us in pre-pandemic years. But it's actually supporting our pricing a lot. Well, there's other factors influencing that too. He further reviews that in 2022, a lot of homeowners started, he called it hunkering down. You may have heard it called the lock-in effect. People are locked into their homes because they have such a low mortgage rate that they don't want to give up. So he shares that a notable 81% of California homeowners with a loan enjoy a fixed rate at or below 5%. So that's really hard to give up when you're looking at today's rates that are at 7%. That's a big change in your mortgage cost. He says 65% are at or below 4% and 29% are below 3%. That is really, really low. And the people that are below 3% are going to have a very hard time letting go of that if they think they want to move to take on a 7% mortgage. I'm curious to what your mortgage is. If you're open to sharing, put it in the comments below. I'll tell you what, mine is 3.75%. And I was a little frustrated that it was higher than what other people were getting because I did something called a bank statement loan, where you're qualifying just based on your total income and not tax returns, because I had some not very pretty tax returns with some of my investments that were happening. So 3.75%, I was so disappointed it was so high when other people were getting 3% or 2.75 at the time. But now I'm really thankful for that 3.75%, and I'm in no hurry to let that go either. So in 2024, mortgage rates were stuck at or around 7% for most of the year. There was a little bit of time when it dropped into the 6s. So if you or one of your friends or family was lucky to get something in the 6s, like, good for you. That was great. Okay, let's talk about expected market time, which is the time from when the home goes active, available for sale, until it goes into escrow. And at the beginning of the year, we were at 54 days. Now that's across all home types, everything from the condo for $500,000 to a $5 million or $50 million house. That's the average of everything. So it was 54 days, and more homes started coming on the market and were accumulating because so many people did not like that 7% interest rate that was being offered. So plenty of buyers were like, we're just gonna hang back and not do anything right now because those interest rates are too high. So we started accumulating more inventory. With the increase in inventory, our expected market time increased, and for the end of 2024, we were right around 67 days. So it went up higher and then it kind of came back down because our inventory does decrease every 4th quarter. So many people, unsuccessful sellers will just pull their homes off the market during the holidays because they don't want to deal with having their home show ready for buyers when they've got their holiday decorations and their gifts out. They just don't even want to be bothered. They want to go to parties, host parties, and not be dealing with showing their home for sale. Okay, so now on to the good juicy stuff, the 2025 housing market forecast. So Stephen gives us 3 scenarios. His main case, which I think he gives about a 70% chance of happening, and then 2 alternative scenarios that he gives 15% each odds of it happening. So he talks about the 2 opposing forces that have steered the strength of the housing market: a scarcity of available homes and home affordability. With the lack of available homes, but yet the mortgage rates eclipsing 7% remained elevated for much of the year. Homes stagnated on the market and the active inventory grew. With the Fed cutting rates, many people thought they were going to cut more than they actually did, because of course the hotter the economic readings, the higher mortgage rates will remain. So let's get to it. So the base case scenario he gives us is that interest rates will be 6.5% to 7%, so they'll come down a little bit from where they are, and that the Federal Reserve will cut its short-term rate only a couple of times. Also, as mortgage rates improve, the hunkering down effect where homeowners ought to stay in their home due to the underlying fixed low mortgage rates will diminish. More people will let go of that lower interest rate and be willing to take on that higher interest rate, and that there will be fewer 3,100 more for sale signs than in 2024, so there'll be more options for people that are in the housing market to buy something. With all of the impact of his predictions, he's saying home values will rise between 3 to 6% for the year. That's what his broadest prediction is that he thinks is most likely to happen. Scenario 2, the economy cools during the spring, which he says is a 15% chance. He thinks mortgage rates will then drop to 6 to 6.5%. If the economy is not doing as well, then the Fed will do things to stimulate the economy with lower rates. And so what would that do to the housing market? He says with that home values will rise between 5 and 8% for the year. Probably because there's going to be more bidding wars. People are willing to pay a higher price with a lower interest rate. And then scenario number 3, stronger economic numbers, stronger jobs market, and a rise in inflation risk. 15% chance for that, he says. So with that, mortgage rates will remain above 7% for most of the year. And the bottom result of that is that home values will be down 1% to up 1% for the year. So between -1% and +1%. And additionally, says the housing market will follow a typical housing cycle, spring being the strongest, followed by summer, then autumn, and finally the holiday market. He ends his newsletter by saying, the bottom line is nobody truly knows the actual path of the U.S. economy in 2025. Based on monthly economic releases and where they align with expectations, rates will be between 6 and 7.5%. Housing is at the mercy of rates. How hot the housing market gets in 2025 depends upon the economy's strength. So with all of that said, I want to share with you guys the last, people are always interested to know what's happening with foreclosures and distressed properties. So right now in Orange County, there's 7 active distressed properties. As a basis of comparison, our neighbor counties, LA County has 105, Riverside 59, San Bernardino 48, and San Diego 14. So very few distressed sales happening. Distressed means it could be as much as someone is late on their mortgage, but it hasn't actually gone very far to foreclosure. Right now, I'm representing a buyer buying a condo in Garden Grove, and it's under notice of default, which means the seller is behind on their mortgage. The mortgage company has notified and given public notice that they're in default. There's no auction date set or anything, probably also because we are in escrow to purchase it. So I'm actually helping a buyer buy a distressed home. Did that mean that we got an exceptional deal on it? Not really. We still had to pay over asking. They gave a low asking to get a bidding war, and they got one. And we paid above asking, but it was preparing the offer in the most compelling way possible that helped my buyer win it. But that's a story for another day. Thank you so much for watching. Make sure you subscribe to get the next Orange County housing report. I publish these every few weeks. You got a link to the whole report below. And happy new year. Wishing you a wonderful year of prosperity, health, and strength. And if you have any questions about real estate, or do you like a free valuation of your home, or just any questions about real estate or contractors in general, I'm here to help you. All my contact info is below.